Welcome, D-Traders! It's me, Kate Stichina, and you are watching a recap of the Asian session. Trading in the morning was beyond amid improved sentiment on Wall Street. Stock index in Australia managed to snap their losing streak and move into the green zone. Japanese shares climbed to 5-week highs. Let's discuss the Asian trade in detail. As the economic calendar in the Asia-Pacific region is empty, traders are now focused on the US inflation and initial jobless claims reports. These figures are crucial because the Fed takes them into account when making monetary policy decisions. Will the regulator be able to stabilize the economy but avoid a recession? As the March meeting minutes showed, some policymakers do not rule out a recession at the end of 2023. However, the Fed's minutes are already irrelevant as they reflect the state of the economy in the third week of March. Over the week, traders saw a significant decline in inflation. On Wednesday, the consumer price index fell to 5% from 6% on an annual basis. Yesterday, the producer price index decreased as well. Moreover, the core PPI also sank to 3.6% from 4.5%. Another bullish factor for stocks was a more significant than expected increase in the number of initial jobless claims in the United States. All these figures indicate that the Fed could end the tightening cycle in the near future. The Reserve Bank of Australia and the Central Bank of Singapore have already taken a pause in the rate increases. In China, the key rate has remained unchanged for more than 6 months. Now, how will the US dollar react to this situation? The central bank is likely to soften its stance amid falling inflation. A strong labor market may help the US economy withstand the shock of the most aggressive tightening in recent decades. Thus, the greenback could retain its status as a safe haven currency. However, its appeal as a safe haven asset is not helping it now. It has been declining for several days, and this week may become the worst since the start of the year. Judging by technical indicators, the US dollar is facing strong bearish pressure as the risk sentiment is high. Traders are no longer concerned about the ongoing disinflation and the turmoil in the banking sector. Today, they will also take notice of earnings reports from the US financial corporations. Perhaps the US dollar could rise slightly following their release. So far, the US dollar index has been dropping for the 5th session in a row. On early Friday, it plunged to an 11-month low of 100.80. Ahead of earnings reports, the US currency consolidated in the red, price corridor of 100.70 and 101.00. If the US dollar dips lower, it may touch the psychologically important level of 100 points. The resistance level is located at 103.05, which is the high of April 3. For the yen, this week has also been rather taxing. However, it managed to add gains. It rose mainly amid external factors. As for internal ones, it usually climbs only following the statements of the Bank of Japan policymakers. Some investors were pinning their hopes on a policy change with the appointment of the first academic economist in the history of Japan to run the central bank. However, Kazuo Ueda quickly dispelled all the rumors about the policy reversal. Since his appointment on April 8, he has already stressed several times that the regulator will remain committed to an ultra-loose monetary stance. Kazuo Ueda explained that the core consumer inflation still stands at 3%, and this is why it would be wise to stick to a dovish stance. Inflation is likely to fall below 2% in the second half of this fiscal year. The dovish stance of the Bank of Japan somewhat limits the bearish momentum of the dollar-yen pair. It's gradually declining amid the expectations of a pause in monetary tightening by the Fed. In addition, the risk of a recession in the United States boosts the yen as a safe haven currency. Given all these factors and the weak US dollar, the yen is trying to climb. It has been able to do this for several sessions in a row, and the pair maintains a 3-day downtrend. In the morning, it was trading not far from yesterday's rebound level of 132. In the Asian session, it was moving in the range of 132.10 and 132.60. If the yen breaks through the support level of 131.40, sellers may encounter resistance at the monthly lows of 130.60 and 130. This week, commodity currencies have also been able to recoup losses, mainly due to the weak US dollar. Friday's Asian session was relatively calm for the Australian dollar. It was moving in the upward range of 0.6764 and 0.6796 amid improved risk sentiment and rising commodity prices. After that, the Aussie consolidated at 0.6765. A further trajectory of the pair will depend on the movement of the greenback after the release of earnings reports. If the Aussie starts to decline, it may reach the support level of 0.6712. If the Aussie climbs above Thursday's high of 0.6797, it will face a strong resistance level of 0.6823. On the weekly chart, the Kiwi has been rising since April 13. In the Asian session, it tried to consolidate at 0.6314. However, it failed to do so and slid into the range of 0.6287 and 0.6316. Shortly after, it fell to 0.6288. Now the bulls need to protect 0.6271. The Kiwi may retain its bullish bias amid high risk on sentiment and the US economic macro stats. If bulls push the Kiwi higher, it will rebound and test the resistance level of 0.6350. In the event of further fall, it could hit the support level of 0.6227. And that's all for now. We wish you a successful day. Hit the subscribe button and keep close tabs on the market developments with us. See you soon.